Welcome back. Now, South Africans may have noticed that there have been a number of new players that have come in on the banking sector side of things. Now, with all the options presented by this competition in the industry, how do customers actually ensure that all banks conduct themselves in line with the sector's acceptable standards? The Financial Sector Conduct Authority, the FSCA, is the authority responsible for supervising the way financial institutions, including banks, treat their customers. Now, earlier this year, the FSCA published a set of standards that outlined how the banks should conduct themselves and how it would be monitored, which is, of course, a necessary step in an industry that constantly has to change and improve how it actually delivers services to its customers. Sindiswa Makhubalo is head of banks and payments providers supervision at the FSCA, and she joins us now virtually for a little discussion on this. Sindiswa, thanks for your time. Welcome to Morning Live.
Thank you so much, and good morning all to your listeners this morning. Thank you for having us here today.
So, Sindiswa, if we could just start by looking at the regulations and, potential banking customers now seeing new entrants coming into the fray and more and more players for that. So, why did the FSCA publish the new standards this year, just to bring our viewers up to speed?
Thank you so much for that. And I think the viewers in South Africa will remember that, for quite some time, the banks were not regulated and were not supervised in the manner in which they conducted themselves and treated their customers. Obviously, things started to change post the global financial crisis that we saw in 2008. Following that, the Twin Peaks reform, which was initiated by the National Treasury in South Africa in 2013. So in 2018, we saw the Twin Peaks reform in South Africa coming into play. That gave rise to the Financial Sector Conduct Authority, and that saw us, having our mandate extended to now include, the supervision of banks in South Africa from a market conduct perspective. That is then when the conduct standards for bank, which is a piece of legislation that is aimed at regulating how banks conduct themselves, came into play, and that was formally now implemented in July 2021 this year. Thank you.
So what interventions exactly have been introduced to actually improve the offering that banks actually make to their customers, and also from your side to improve the quality of products and services and its supervision?
So the conduct standards that we put in play, having learned in the past through the many commissions of inquiry that were put in place, we realized that there were certain areas that needed quite focus from the banking side to ensure that customers are treated fairly, as well as the good outcomes for the customers are yielded at the end of the day. So what banks have started to do, for instance, and what the conduct standards kind of drive now, is that the products that are designed for the customers and the services that are offered for the customers do meet the needs of the customers. So gone are the days when they will just produce a product, and now a product is designed to ensure that it's suited for the customer and it does meet the needs of the customer. But also that customers now have a voice. They can now raise the instances of unfair treatment that they see or they get from their banks, as well as be able to raise concerns with the products that they get. But I think what is quite of interest for me and what is quite exciting about this process is that customers now can start holding the banks accountable for the promises that they've made. So if a bank has said this product will do this and that, and it does not perform as promised, the customers now, through this piece of legislation, is able to hold the bank accountable to say, you promised me this, and this is what you have delivered, which does not meet. And obviously, from a regulator perspective, our role is to ensure that the banks leave their promises. What they promise to do, they do just that for the customers, just to ensure that the customers at the end of the day are treated fairly. So basically, that's our role that we play. But I think it's exciting time for our customers in South Africa, what has come through this piece of legislation.
And as you say, Sindiswa, you have now put a legal framework in place, and that's all good and well to have the laws in place to supervise the banks. But what mechanisms do you also have in place to do the actual supervision in order to ensure adherence to these standards by the banks?
So what we've done and what the Financial Sector Regulations Act, advocate is that of a very, proactive approach and a very preempting approach. And that is the kind of the supervisory approach we've taken from the Financial Sector Conduct Authority, that we are going to engage with the banking sector to ensure, that at the end of the day, whatever that they are doing do not prejudice the customer. So our approach has that been of, preventative measures that we've put in place to say, let us work together with the banking sector to ensure that, whatever they do and whatever they put in place is good for the customer and it treats the customer well, so that we don't get to a space or stage wherein we sit with a bank and we say, you did not write here. So we did not do right here. So the aim for us is such that we work with the sector. We are proactive in our engagements. We are preemptive. We stop things before they happen. But obviously, if they do happen, there are steps that we'll have to do. But in our side, I can safely say that the conversation and the robust engagements that are currently taking place with the sector are such mechanisms that are aimed at ensuring that, the customers, the way that the banks have promised to treat the customers is exactly what is happening. But also, we don't leave it there. So for instance, if a bank tells us that this is what they are doing, or this is how they are treating their customer, or this is the kind of experience that the customers are getting, we employ mechanisms such as a mystery shopping exercises, wherein we test that what the banks say they do is actually what the customers feel on the ground. So there's quite a lot of different mechanisms that we employ to ensure that at the end of the day, customers are treated fairly and good outcomes are delivered for the customers.
There is, of course, a perception that banks are corporate super citizens and can basically just do what they like and get away with. So I'm quite interested to know, when you talk about these robust engagements, what do they center around with the banks?
So thank you for that. And I think it kind of helped that, even before we implemented the conduct standards for banks, the banks were quite ahead. And I think earlier on you spoke about the new entrants in the market that are coming in. We are seeing a widespread of digitization that is coming into play. And banks have kind of understood that the key differentiator in terms of their services now is going to be that of customer experience. And gone are the days where banks, could do anyhow if that was the case. But now what we are seeing and the shift that we're seeing from the banks is really taking, the customer at the center of what it is that they are doing. So what we're seeing is banks, all kind of banks that we have in South Africa, really centering their strategies, centering their operating models around the customer. So the conversations that we're having is that, it must not only be about, the bottom line. The customers must be at the center. You must make sure that the products that you develop, that the services that you render to the customer, do meet the needs of the customer, and you prioritize the customer. So if we can achieve through these engagements the actual or the fair treatment of customer, I think we would have, achieved our goal, because that is really what we are around. So the engagements that we have with the bank are that. But I must say that it is, the conversations are not difficult, because the banks also understand that for them to remain relevant for them to be sustainable, the issue of market conduct, the issues of prioritizing your customer is key for their survival.
So to that point, let's go to a practical example. In the past, we've, for example, heard of allegations of interest rates being decided on the basis of race profiling of clients by certain big players in the sector. Has your institution followed up on those allegations, and what did you find?
We get quite a number of, reports that come through. We get quite a number of allegations that come through in terms of what the customers feel have been treated. And I can safely say that there's quite a robust investigations that take place with each and every, kind of complaint or kind of allegation that comes through. And the one in specific that you're referring to, the authority has, engaged that man and have engaged, the customers have engaged the banks just to ensure that, what the allegations are saying and versus what the banks are saying is not substantially correct.
So what did you find in this instance?
So what we found, if you follow that allegation, and you follow the kind of investigations that we've done, what we found is that the methods that the banks employ when they render those services is actually not as per the allegations. So we found that the allegations that were put up front by the people who alleged those impractices were not as the way that they put. So if you follow all the other allegations that we get, we do go through a robust investigation process to make sure that the allegation is either true or not, and we can comfortably say on our side that we've done our part to ensure that the customer was not prejudiced.
So you say you found that it was not as was stated initially in the allegation. So
Yes.
What exactly was the practice? How do banks actually determine interest rate allocations for their clients, if not in the way in which it was alleged?
So the banks take each customer. There's what we call a risk profile, which differs from a customer to customer. And that is what the banks look at. That is what, a profile of my profile and your profile will totally be different. And that is what the banks look at. The banks will look at a profile of a customer and not as per race. The risk profile is a key determinant of how they, lend credit to their customers. So we really unpacked that process and really got to understand that a risk profile is really what matters at the end of the day as to how the lending process is derived. Obviously, there are laws that govern how lending process is done. We know that the national credit regulation is quite a key and plays a pivotal role in driving the affordability and in driving how lending is done. But what I can safely say here is that when in our investigations, we got to understand that the risk profile of a customer is really the key determinant of what lending is done and is not based on race.
We'll leave it there for today. Thanks so much for your time, Sindiswa Makhubalo, who's head of banks and payments providers supervision at the Fsca, talking to us about customers and the acceptable conduct by banks as new players are getting into the sector and providing options and bringing competition into the industry. But of course, always critically important to know what exactly your rights are in all of this.